you've got central banks buying, you've got negative interest rates, you have the coronavirus, you have geopolitical tension and uncertainty. Throw U.S. election on top of all of that. This is one of the most bullish setups we've seen for the gold price. I don't know ever, but certainly in a very long time.
This is Dan Dix here reporting for Press for Truth. And if viewers of this channel have been paying any attention to the metal markets, they will know that gold has reached an all-time 7-year high of $1,600 an ounce just this past week. And this really has a lot of analysts wondering if this could be the beginning of a new bull run for the precious metals. And now, meanwhile, this is all happening over fears of interest rates cuts coming from the central banks. We have economic headwinds potentially coming down the pipe in terms of this coronavirus, COVID-19, which is scaring people in China and others around the world. And this begs the question, could this have investors hedging their stock market risk by getting involved in the gold space? Well, joining us on the line to help us understand what's happening in this space is Amir Adnani. He's the chairman and founder of GoldMining. GoldMining.com is the website. Sir, thank you for joining us here today on Press for Truth. I wanted to get your views in general about using gold as a hedge against these coming hard times. But before we get into that, maybe we could take a quick look at what some others leaders in this space have been doing recently, and maybe I can get your comment on that. For example, billionaire and hedge fund manager Ray Dalio right now is going huge on gold. His deputy Greg Jensen is saying gold's going to go up 30% to a new dollar high of over $2,000 an ounce. We've got Paul Tudor Jones, another hedge fund billionaire, betting big on gold. He's saying it could go up to $1,750 by this year. And of course, at the recent Davos meeting, we've got other hedge fund managers saying their silver is going to be their top pick for 2020. So do you agree with some of these guys, and where do you see this going?
Hey, good to be with you, Dan. And it's one thing to look at and talk about what the billionaires are doing, but let me give you an example just from a week ago. It was my 12-year-old son's birthday. And you know what he asked for his birthday present? He wanted a gold coin. And the reality is I kind of sometimes don't like using the word hedge when thinking about gold, because gold is money. And it's money even in the eye of a 12-year-old. And when you kind of look at and you know, we're obviously maybe somewhat kind of, you know, in a world right now where I don't even know where to start when thinking about all the challenges and problems out there. I mean, you touched on it. So in a world where the stock market is at a record high, but despite the fact that it is at a record high, we still need to have low rates. You know, the market will throw a temper tantrum the moment the Fed talks about going back to normalized rates. That, you know, these rates that we have right now are not normal. And so something doesn't add up. And then you throw on top of that Apple's recent guidance about the Q1. Obviously, the coronavirus and the slowdown in China is having an impact. It will have an impact. It was just a month ago that we had the geopolitical issues in the Middle East with Iran. And right now, there's so much focus on the coronavirus. It's almost as if we think the situation with those tyrants running Iran and the regime there is all fine and dandy. Well, no, it's not. And so we have a number of open-ended issues, whether it's geopolitical with Iran or North Korea. We can't trust and believe the data coming out of China. So God knows what the end of the coronavirus is. And when we do reach the end, what will be the real economic impact that hasn't really been felt yet? And then on top of that, you have this phenomena, this issue with negative interest rates sitting around $11 trillion, got as high as 17 trillion last year. You saw yesterday probably that LVMH, the big luxury company out of France, they're now issuing corporate bond with negative yielding rate. And so when you start to talk about negative interest rates with the magnitude that we have right now, this is unprecedented. This is uncharted territory. But for it to be happening after over a decade of low rates to begin with, and we need even lower rates, we need negative rates, this doesn't seem right. And so in that environment, it does seem like the only money that can't be manipulated, that truly isn't someone else's liability, that you can't have central banks manipulated to the point of creating a large trillions and trillions of negative interest rates, is gold. And so gold is money. Of course, it is a form of hedge as well, but it's money. It's the oldest form of money, and it makes as much sense to a 12-year-old as it does to a billionaire hedge fund manager. And I'm not here necessarily to think about or maybe have strong views on what kind of gold price we're going to have in 12 months' time. You know, you mentioned some of the targets you have. It does seem reasonable to me that we should at least retest the 2011 high. What happens after that will depend on this year's events, but between an election, and by the way, what about, you think about the fact that you end up with Bernie Sanders in the White House. What does that mean for the economy and the gold? And so the reality is we have so many different concurrent things going on right now, all of which bode extremely well for gold. And the last point I'll touch on is really the issue of de-dollarization and central bank buying of gold. Central banks, especially in Asia, have been net buyers of gold month in and month out. And that's another kind of dynamic that really goes to show you've got central banks buying, you've got negative interest rates, you have the coronavirus, you have geopolitical tension and uncertainty. Throw U.S. election on top of all of that. This is one of the most bullish setups we've seen for the gold price. I don't know ever, but certainly in a very long time.
Yeah, absolutely. And I mean, I'm sure you don't have a crystal ball, but looking at all these factors, I mean, we can get a pretty good idea of where this is going. I know in the year 2000, gold peaked. Since then, it rose every year for 11 years. I mean, no asset in history has ever done that. In 2000 was another peak production year for gold, in 2018. So why is gold so hard to find, and how does peak production play into the price of gold today?
Well, first of all, the period from 2012 or 2013 until now, we had a weak gold price. We had a gold price that was hovering around, let's say, anywhere between $1,000 to $1,300 for most of this period. And during this period, there was a total sort of lack of investment in the sector by the major gold producers. And because their focus was on deleveraging their balance sheet. So instead of spending money on looking for gold, they're spending money on trying to just reduce their debt and maintain their dividends. So we end up with a situation today where the industry resources and reserves are at a decade low. And so this ongoing sort of underinvestment is something that contributes to the concept of not so much peak production, but the question really of also exploration for gold. Because if you think about it, we've been exploring for gold for 5,000 years. When I say we, I mean humanity, civilization, the Persians, the Greeks, the Romans, anything that was a so-called low-hanging fruit, right, sitting at surface type deposit has been discovered. There's such a big focus right now on ESG mandate for the funds, environmental, social, and governance. This was the big theme of the latest major gold conference in Denver last September, the Denver Gold Forum, where on top of the fact that gold is becoming harder to find, on top of the fact that we have an 8-year period of underinvestment in gold, companies now are not really going to be welcomed by big funds backing them to go to countries where there's perceived lack of governance or the right environmental social practices, which means you're just making it more and more difficult to look for gold. And so I think at the end of the day, that's the fundamental side of the story as well. I think in the first part of your question, we talked about much of what drives demand for gold right now. Mm-hmm. And I think here you touched on an excellent point, which is what about the supply side of gold? And the supply side of gold is a physical discussion. So it involves with exploration development. It takes a long time. McKinsey Consulting had a report recently that also touched on this, that said, generally speaking, not just in US and Canada, but generally speaking, it takes longer now to permit projects for mining. So gold is no different. It has to be mined. And so the cycle now to permit could be 5 years just to permit a project. And that's once you've already made a discovery. And so it takes longer and longer to develop, permit, and bring new projects online, all of which just means that we should see continued upward pressure for the gold price, because not only is there increasing demand, again, from central banks all the way down to billionaires and 12-year-olds, but the fact that you have this issue with gold being harder to find in jurisdictions that are acceptable to large institutional investors and to people like you and I. I mean, I think you and I would also agree it's better to see mines get developed right here in the US or Canada or mining-friendly jurisdictions than taking on jurisdiction risk in unstable countries or countries that just are difficult to operate in.
Well, these may be some of the things that investors aren't understanding, and possibly why they're shying away from mining companies in particular. So what sort of driving factors, what sort of catalysts may need to happen in order to get them excited again to move into the space? I mean, do we need a stock market crash? Do we need, dare I say it, an all-out dollar crash? What's it going to take for these guys to understand, you know, the value in jumping back into the mining market?
That's an excellent question. Clearly, right now, we still have a very strong stock market. And every time we have a dip in the stock market, the play for the last decade or so has been buy the dip. And frankly, it's worked. And so people are maybe unwilling to get rid of that habit yet. And so we still have, especially over the last few weeks, despite the issue with the coronavirus and the real impact it will have on the economy, the US stock market has been quite resilient. And so you look at the equity rally we had in gold stocks in 2016, it was on the back of greater uncertainty created by Brexit at the time. And that did kind of perhaps increase the sense of urgency to come into gold faster. This is unusual. It's hard to kind of put a finger on it then. I mean, at least investors from a speculative point of view, and not that gold is only a speculation, but if you recall, a couple of years ago, we had speculative money and capital going towards cryptocurrency and Bitcoin. That's not so much the play right now. There was the frenzy around cannabis and all of that. That's really not the play right now. So I think there's less to be distracted with from a speculative point of view. Having said that, the stock market is still raging. I'm not sure what's going to potentially cause it to pause. But again, I come back to one other point. Gold's most important relationship, in my opinion, at the end of the day, should not be to the stock market or anything else like Bitcoin or cannabis. It should be to real interest rates. Real interest rates being nominal rates adjusted for inflation. And the more we continue to see this trend towards negative interest rates, the more we see that the Fed isn't raising rates in the US and may in fact end up having to induce some kind of quantitative easing simply due to the fact that the US dollar is too strong. Trump knows it, and everyone knows this right now. The reality is that the US dollar compared to every other fiat currency is simply too strong, ultimately to the detriment of the US economy and US export and US debt holders. So, and I think US treasuries are now accounting for almost half of global treasury and debt in the world. So ultimately, due to the main driver of the relationship the gold price has to real interest rates, and those looking more and more like heading into a negative and a deeper negative environment, I think we'll get the underpinning for gold. I don't know what that specific catalyst will be, but the macro setup and the specific key points I think are there, and they're happening.
Mm-hmm. All right, well, let's talk a little bit about what your focus has been, and in particular, GoldMining.com. What would you say is what the company focuses on, and why should investors be taking notice right now?
We have a very specific business plan that I like to explain to you, and it's different. It's different in the sense that we took a view that in the gold business, you've got on one end companies that do early stage exploration. It's very speculative. And you're drilling, looking for gold. And on the other end of the spectrum, you have gold producers. Right in the middle of that spectrum, you have projects that have been drilled and explored for gold already. Tens of millions of dollars has been spent, and they're what we call resource stage projects. So some amount of gold in the ground in the form of what the industry called resources has been defined. So you're not taking on that early stage risk, but you're also not in production yet. And we took the view that during a prolonged bear market, those resource stage gold projects become attractive to buy. They start trading below their replacement cost. What is the replacement cost? Well, all the money it took to drill for the gold resource in the ground. And that you can buy these projects literally for 10 cents on the dollar, these resource stage projects during a bear market. We made our very first acquisition of a resource stage gold project in 2012. And since then, we've been buying resource stage gold projects as recent as just a few months ago, to the extent that now we control projects in 5 different countries in the Americas: United States, Canada, Brazil, Colombia, and Peru. These projects had combined exploration dollars of over $280 million spent, and we acquired them for $80 million. So again, less than the replacement value of drilling. And when you look at what the projects that we acquired were worth in the hands of public companies during the last bull market for gold, that number would be over $800 million. And we paid $80 million. So again, a classic case of 10 cents on the dollar. What was the difference? When we were making acquisitions over the last 8 years, the gold price was more or less below $1,300 an ounce and was as low as $1,000 an ounce in 2015. Just in the last 6 months, or closer to 12 months now, we're seeing this breakout in the gold price. And gold, actually, you said it at the beginning, for the first time is over $1,600, first time in 7 years. And so we're kind of coming out of a long period where our company, GoldMining, has been acquiring these resource stage gold projects, building a very large and diversified portfolio. It's a multi-jurisdictional portfolio. We have about 10.5 million ounces of gold resources in the measured and indicated category and 12.4 million ounces in the inferred category. That makes us the largest, that is the largest portfolio of gold resources of any pre-production company in the world. It's quite a size, and it's, again, very diversified. And so our company believes that in a rising gold market environment, these assets will start to trade at a higher valuation in the marketplace, that projects get re-rated as the gold price gets re-rated, and we go from a 7 or 8 year bear market to now, for all the reasons we've just discussed, into perhaps a new bull market cycle. And so as this happens, then our focus will go, we're still working on acquisitions, but then we start to look for developing this portfolio. And remember what I said earlier, the sector, the gold industry, has underinvested in gold resources for the last 7 years. And there's a shortage, a severe shortage of gold resources. So I think we're in the driver's seat. And I think GoldMining is in the driver's seat because you control resource stage gold projects just as we're coming into a better market. And there's going to be, I believe, a scramble where companies that are producing and depleting their ore bodies now need to replace those by bringing new projects into their pipelines and building pipelines, replenishing pipelines. And that in a nutshell is how I would describe the company today.
Well, I love the idea of essentially not mining until it becomes profitable to do so. And, I think that's a great idea. So what would you say is coming next for your company?
Well, again, first of all, one of the key objectives we have right now is to raise awareness about our company, because frankly, we're still trading at maybe 1/3 of our implied valuation for our total gold resources compared to our 2016 level. So I actually think there's an interesting disconnect here, where the gold stocks were trading higher in 2016 because perhaps there was maybe more conviction in the gold trade then, despite the fact that the gold price was $300 lower than it is right now. So there's an interesting disconnect. So number one, I think it's important to still get that re-rating on what we have and most likely get back to our 2016 valuations. Number one. Number two, as I mentioned, we're still in the early stages of what could be this beginning of this bull market for gold. And it certainly seems to be that case now that we've broken 1,600. It's early though. So what that means is we're still making acquisitions. Our plan is to continue to look for situations where we can maybe make one last round of deals before things really take off.
Mm-hmm.
and to come up with resource reports on acquisitions we've made that we haven't released total numbers for yet. And so we'll stick to our knitting for the next few months, make more acquisitions, put out more resources, so our total resource inventory continues to grow. But at some point, when when we get the right signal, and I think it will be driven by seeing a further rise in our share price, which implies our cost of capital has come down, we'll then allocate more capital to developing the current portfolio, permitting, licensing, work that shows these projects are being advanced, and ultimately at some time, look to see if it makes sense to monetize or sell our portfolio or joint venture with bigger companies. That becomes the exercise perhaps beyond sort of 6 to 9 months.
Yeah, well, honestly, it's such an exciting time right now to be involved in this space in any way, shape, or form. And
Yes.
You guys are staying a couple of steps ahead of the game. So if viewers are watching this and they say, yeah, you know what, this guy's making a lot of sense, and these guys seem like they're positioned very well, how do they follow you? How do they learn more from you guys and maybe even get involved and invest?
Well, as you touched on it, the best place is probably our website, www.goldmining.com. We're listed on the Toronto Stock Exchange in Canada under the ticker symbol GOLD, GOLD. All of that is easy to remember. And in the US, on the OTCQX market with the ticker symbol GLDLF. And I think, get in touch with us. We've got a very responsive investor relations team that can share in more information and answer more questions about what we're doing. But I tell you, I mean, the position we're in is certainly unique, but it didn't happen overnight. Again, we started to lay the foundation for this really early on in 2011, made our first acquisition in 2012, and have been doing deals nonstop. And in fact, even if you look at it in 2015, when gold got as low as almost $1,000 an ounce, we made an acquisition. We bought a gold project in Alaska, the Whistler project, gold and copper. And so we can truly say, just look at our track record. We were truly counter-cyclical in not just having a view, but executing that view, putting our money where our mouth is. I mean, I'm personally the largest individual shareholder in the company. So we not only show very good alignment with our shareholders, we had a very counter-cyclical and contrarian view on when and why to be buying resource stage gold projects. We have a track record that shows we pulled off deals. And finally, along the way, have attracted more and more institutional investors that look at our strategy. And I think having them kind of validates what we're doing. We have now some of the biggest gold funds in the world, from the London, UK to New York, who have been accumulating a position in the company. Gold producing companies like IM Gold, it's a multi-billion-dollar gold producer who owns equity in our company. And legendary gold investors, people like Doug Casey or Rick Rule, who are Marin Katusa, who's one of our largest shareholders, who is a New York Times bestseller and hedge fund manager out of Canada. You look at the roster of investors we've put together, I think in a way also validates what we're saying. A long track record. As the gold market heats up, this is going to be an exciting space to be in. But I think companies that have put in the time and energy to build a fundamental foundation should do better and should be ahead of the curve. And I think that's how we've positioned ourselves.
Awesome. Well, this is precisely why I wanted to have you on today. You guys are clearly coming out on top, and you're doing something right when your 12-year-old son wants to have some gold for his birthday instead of some silly game or whatever the meme is of the week. So you're doing something right there. So I definitely want to strongly encourage viewers of this channel, check out the links below. These are the guys who are at the forefront of this and been positioning themselves since, as you said, 2011. So once again, Amir, great work. Thank you so much for talking to us today. It was a pleasure to have you on Press for Truth.
Yeah, thank you very much.
We all want truth. The truth will set you free.